Welcome back to another week of Stocks in Review for the upcoming week. In this special edition, we review questions from subscribers that were sent in all week long using our WhatsApp phone number. It worked out really well. Feel free to continue sending in questions, and I'll do this again periodically. And of course, I'll respond to questions that are timely, quickly. Let's take a look at news that can affect your stock portfolio. The big news of the week continues to revolve around Hurricane Irma. She barreled through the Bahamas and Puerto Rico on Wednesday and was heading for Florida and most likely the southeast U.S. The damage will just continue to add to the billions from last month's Hurricane Harvey. Stay tuned. Fallout continued all week from the hydrogen bomb tested by North Korea last weekend. It was the largest one that they've ever tested. A response is still in the works. In cryptocurrency news, last weekend was a super scary time as Bitcoin lost hundreds of dollars and Ethereum dropped at least 12% when China officially announced a halt to ICO financing activities. Within a day or two, the top two digital currencies recovered nicely. For those courageous enough, it was a great time to buy Bitcoin under $4,300 and Ethereum under $300 a coin. I jumped back into Ethereum again. In case you're wondering why you see a Lamborghini driving around, this week a Newport Beach car dealer announced that he will soon start accepting Bitcoin Pay for cars at his Lamborghini retail facility. And I thought that was kind of cool to share with you. On watch for the coming week, I have Aurinia Pharmaceuticals, NVIDIA Corporation, Northern Dynasty Minerals, and Array BioPharma. For AUPH, there's been a lot of positive press lately, and the stock has held up quite well on some really bad days. The technicals look really good, especially this midweek. I think it's going to be up even more next week. NVIDIA is down just about $4 from its highs of last week, and this is another stock where the technicals look very bullish. This stock is part of an elite group of semiconductor stocks to recently outperform the S&P 500 index as well. For NAK, we all woke up to a pre-market price of $1.90 a share after Labor Day. More positive press and the impending partnership announcement makes this a no-brainer to be on watch again. ARRY continues its march up, and the coming week should be very telling. I've been in and out of this a few times this week and it's been very easy money, but come next week, it might be smart to just hold for closer to $11.50 or $12 a share. So just be sure to check your dojis. I just want to add one more stock to my watch list, HTG Molecular Diagnostics. Next week, they present at the annual Rodman & Renshaw Investment Conference in New York City. And they've had some very bullish movement on their stock in the last few weeks. I think it's worth a look. A new stock for the week that I wanted to bring to your attention is Verastem Incorporated, a Massachusetts-based biotech firm that has 32 employees and focuses on treatments for cancer. The company just reported top-line data from its Phase 3 DUO trial, evaluating the efficacy and safety of its drug duvelisib to treat patients with various categories of leukemia. The drug reduced the progression of death in test patients by 48%. The big upside here is potential for a buyout since the drug has come so far and could be worth over $800 million. Domestic sales could be as much as 40% of that figure in the first year alone. Remember to buy on the dips and watch those charts. Alright, let's get on with questions and answers from the week. Chris G. from Seattle, Washington wrote, I read everywhere that investors make a ton of money on shorting a stock. Can you explain this? Sure. Essentially, you short a stock if you think the price will go down. You do this by borrowing shares from a brokerage firm and you sell it to another buyer. If the stock indeed does go down, you profit from the difference in the buy and the sell price after you pay the brokerage whatever the margin fees are you owe them. You can only use a broker that utilizes a margin account if you want to be able to short stocks, because they're lending you money to trade, more money to trade than you actually have to trade in the account. So if you're wrong and the stock doesn't drop but it goes up, Then you have to quickly replace the lost money in the margin account, and that's a very painful experience. That's why shorting a stock is considered to be an aggressive method to make money in the stock market. And if you use Robinhood, well, shorting isn't even allowed. Rick W. from Jacksonville, Florida wrote, "My dad told me I was crazy for picking random stocks and day trading. He said I should just pick a couple good ETFs and I'd make more money in the long run. What's your take on this?" Well, he's partly right. Not the part about you being crazy, but the odds are generally stacked against day traders who can't watch their stocks closely every day, and they don't generally follow all the accepted rules of trading, like doing your due diligence and researching companies, as well as analyzing charts like we talk about in my videos. A lot of investors I talk to who day trade get a thrill out of it, so that when they win, it's hard to quit day trading altogether. My suggestion would be to scale back the amount of money that you invest in your day trading activities and allocate a larger portion into ETFs. ETF stands for Exchange Traded Funds. These trade just like stocks on the normal exchanges and work like mutual funds in many ways. They're organized in a basket of like-kind assets, whether we're talking about biotech companies, technology stocks, and more. There's a ton of these out there. As a matter of fact, the top 3 for 2017 are all tradable on Robinhood, and they've had incredible gains for 2017. Let's take a look at ticker symbol FBT. That one is up 27% in the last 12 months. Another one, MCHI, is up 29%. And the third one I wanted to show you is SPXL, up a whopping 380%, again in the last 12 months. I'll try to provide regular updates on these to see how they progress throughout the year. Declan from Las Vegas wrote, "I'm a pretty successful investor and I'm up about 18% for the year. Is there any advice you have that might help me increase that number from here on out? And thanks for all you do." Well, thanks, Declan. Being up 18% isn't half bad. A lot of people wish they could have those kinds of problems. But I guess I'd suggest to you to add the following question to your analysis when considering establishing a position in a stock. You should ask yourself as an investor, who am I betting against? Most new investors base their decisions on straightforward catalysts, like, is the company getting FDA approval, or will the EPA acceptance make a difference? And the more savvy investor takes it a step further. He or she's actually betting for or against something. For example, with Northern Dynasty Minerals, if copper prices were tanking and gold was just there, would there really be that much interest in finding a partner to access what would still be the largest supply of gold and other minerals in the world? I challenge you to look beyond the obvious catalysts as often as you can, and you'd be shocked at how much it will tell you about what kind of investor and a person you are as well. Brian K. from Pittsburgh wrote, "Is there a best time to sell and buy a stock?" Well, this is really an open-ended question. Let me throw a few things out there that might be helpful. When you're on the buying side, you'll make more money if you buy after the price has fallen rather than after it's gone up. But the reason why it went down is what you should investigate. Ideally, if you buy when others are pessimistic, which by the way is humanly counterintuitive to how most people typically react, and sell stock when everyone else is super optimistic, or greedy as some people might say, you also increase your odds of making more money. Another thing I want to add is to avoid stocks that have had a reverse split in the last 3 to 6 months. In general, these are bad news, and unless a company is doing something really spectacular to turn itself around, you may land up regretting it later on. If I had the time, I'd love to research all the companies that have had reverse splits and see what percentage of them have actually turned themselves around or continue down that dark red path. I'm pretty sure you'd see more red than black. Anonymous from Newmarket, New Hampshire wrote, "What's your thoughts about the upcoming forking for Ethereum? Any positive about it or risks associated with it? Also, any thoughts on ULTA? Well, thanks for your questions. Ethereum has been through a number of hard forks over the years, so I think it's going to be just fine. The best part about the whole thing is the buying opportunity that the uncertainty brings with it. So be sure to watch and buy on the dips. ULTA has been mostly a stellar stock for years, but I'm pretty negative on most retail kind of stocks because of the Amazon effect. I know you mentioned that you bought in at $207 a share, so you did really good. The charts show that there should be another $7 to $10 upside. After that, I would revisit things again. Please remember, investing in the stock market carries risk. Never invest more than you can afford to lose or not have access to for an extended period of time. If you enjoy our videos, we appreciate if you could click like and subscribe. Have a great day, and we'll see you next week.